Do you think that stocks are more likely to be up double digits next year or down double digits?
If I'm using history as a guide, then they would be...
Well, use whatever you want.
Then, hey, I'm answering the question here. You can't tell me how to answer it. If I'm using history as a guide, stocks are more likely by a factor of, 2 to 1 to be up double digits than down double digits. How's that sound?
Obviously, you did not read the disclaimer that past performance is not a guarantee of future performance.
Okay, so you're just going to guess instead of using history as a guide?
Yes.
Okay, so what's your guess?
Well, I'd say 60-40. 60% of me thinks that they're going to be down double digits. I'd go with 40% as the other. So if we're going to use history, since 1926, stocks have been up double digits. And when I say stocks, I mean the S&P 500. And I understand that the S&P 500 did not exist before 1957, I believe it was. Sue me. Stocks have been up double digits 54 times and down double digits only 11 times. So if we are using... Yes?
I'm pretty sure did you steal this data from me?
No.
This is from one of my blog posts.
I just did it this morning. Listen, it's public data. Okay. Leave me alone.
I sent you this blog post last week.
I didn't read it.
Okay, obviously.
However, stocks are definitely, I would say you could use this past history as a guide. Stocks have been up or down double digits 65 times and only up or down single digits 28 times. So more than 2 times more likely to be up or down double digits than not.
I knew this because I wrote this blog post like a year ago.
Well,
but keep going.
I wrote it 2 years ago. You stole it from me. So the survey of the week comes from an article that Michael Santoli wrote over at CNBC.com, which we'll put in the show notes. The consensus strategist forecast for the S&P 500 for any given year typically falls in the 5 to 10% range, which we know doesn't make sense, but that's just what it is. The average strategist predicts a gain of 6.5% next year. This is kind of interesting. The maximum target is only 9% higher, so a pretty cautiously optimistic crowd.
Why do they even do these anymore?
Well, because I don't know.
It's who looks at this stuff and says, "Yeah, this is how I'm going to invest my portfolio," because someone from Credit Suisse thinks that the stock market is going to be up 8% this year.
Well,
what's the point of this?
Actually, Santoli says since 1928, the S&P has showed a gain of between 5 and 10% only 6 out of 91 calendar years. So I'm using total return data, so I guess it makes things a little bit different. But
then they take these forecasts, and then 6 months into the year, whatever's going on in the stock market, they update them, and then 3 months left in the year, they update them again. What's up? Just stop doing it.
No.
Just stop.
No.
It's useless. No one uses this stuff for anything except to make fun of it.
Excuse me.
This is for us to mock.
That's exactly.
That's it.
Wow, that was about as animated as you get.
Okay, what's your target for the year end?
Hold on, let me look at my notes. What index are we talking?
Well, I think everything is a second half story, so you got to take that into account. I'm recklessly pessimistic, and you're cautiously optimistic. So if we average those two,
my year-end forecast for 2020 is drumroll 2987.
Okay, with dividends, that means. Okay, so you're picking it to stay the same.
No, that's about a 6% decline. And yes, I just made that number up.
Okay, so last week I made the point that mom and pop are not the biggest drivers of the stock market anymore, and it's mostly institutional. And Jim Bianco wrote a piece at Bloomberg that kind of talks about what I was saying here, that things have become more professionalized, but he put some numbers on it. And he says the single biggest influence in investing today is the modern wealth manager. So according to Investment Advisor Association, the U.S. has 13,000 registered investment advisors employing more than 436,000 wealth managers, and they direct more than 43 million accounts with a combined net worth of $84 trillion.
Caveat.
That's not money. That's how much these people have in terms of real estate and cash and
total
other
assets.
Holdings and total assets, businesses, whatever. But anyway, these are the people with $84 trillion in net worth that are having their money managed by professionals. And he's also showing this survey from TD Ameritrade that said 88% of wealth managers are using ETFs now. And it kind of goes through all these different flows. But again, it's getting to this fact that there's just more professionalization of the markets. And it's not these retail investors that are putting their finger in the air and figuring out which way the wind is blowing today, and then making a decision about what to invest in. Oh, should I invest in AT&T or Verizon? Like, that's not what's moving the market these days. It's what these wealth managers are doing. And I think maybe that's one of the bigger trends of the past decade that a lot of people have missed for why U.S. stocks have done so much better than the rest of the world, because we have this more professionalized marketplace of wealth managers that are keeping people in diversified portfolios, and then you have this whole rise of target date funds, which is close to $2 trillion now. I think it's.
I don't know that I buy that.
It's never been easier for people to have a more coherent investment strategy than it is today.
I don't know what that has to do with the performance of stocks and bonds, but
okay, taking out the bond piece, investors are let's say investors are better behaved and they're sticking with their portfolios longer. Does that kind of make sense that yields in stocks have come down, like the earnings yield has come down a lot because people are staying longer and valuations have risen?
I think you might be reaching, but this raises a good point, if you'll allow me for a minute. Adam Sandler was on Howard Stern, I don't know, 3 weeks ago.
Hey, hang on, before you get to this. Who are you a bigger fan of, Howard Stern or Mike Francesa? Because I feel like these are these are your two gods.
No. It's not even close. Mike Francesa, everybody's sort of in on the joke that he's, just a total cartoon. I don't want to be disrespectful, but he's no, I would put him in a much separate bucket. Howard Stern is my guy. Okay. Anyhow, Sandler was talking about the interview that he gave with the New York Times, and he hadn't given a major interview like that in like 25 years. And he was talking about it, and he was talking about the interview he gave in the 90s, and he was reading it back, and he said, and I'm paraphrasing, he said, like, I don't remember saying that. I don't even think that. I don't know what I think. So this struck a nerve with me, because oftentimes when you and I are like having this dialogue, I will listen to the show 48 hours later on Wednesday when it's released and disagree with something that I said previously, because, I don't have fully formed opinions on everything that we talk about, because we're just, sort of going off the cuff.
You yelling at your phone, that guy's an idiot!
So I disagree with myself often, and it's funny, just the way that he said, like, I don't know what I think. Now, there was somebody that watched YouTube videos of ours who did not like that I don't know what I think. I think, so Josh and I do this thing, what are your thoughts, every few weeks, where we don't know what the questions are in advance, so sometimes I don't really have a great answer, which is, it's fine. But somebody wrote, stop wasting time. When your guest answers 3 out of 6 questions with the caveat, I have no idea, with the attitude, I don't care either, come up with a new guest or come up with new questions.
Yeah, but I feel like you are willing to admit what you don't know, but when I make an opinion, you say that I'm wrong right away. So
is that true?
You know what I don't. You say, no, that's a dumb idea. You say what I don't know, but you know what you don't know.
No, I didn't say that was a dumb idea. I just said I don't know about that. But a further point is that you are much more thoughtful and deliberate about what you say, whereas I don't really have much of a filter, and that doesn't really look so good sometimes.
There's a lot of stuff I don't know too. I think I'm a bigger take machine than you. That doesn't mean I'm right. That just means I have more takes. But okay, so speaking of this, sticking to stuff we talked about last week. So
no, wait, hold on. So just to put a bow on this, I disagree with you.
Okay. By the way, put a bow on this is something you can only say on a podcast. You would never say that in real life anywhere else.
Yeah, because if somebody said that to you, you'd be like, what are you talking about? Put a bow on what?
Yeah. People often ask me. That's another podcast thing. Okay. So last week we talked about, does it make any sense that the U.S. has a bigger share of GDP, a smaller share of population, and an enormous share of market cap?
Can I just say one last thing?
You got it.
It's very possible that if I say something and you think I'm an idiot and you disagree with me, it's very likely that I disagree with me too. So please just save your emails, because it was probably a very half-baked idea anyway.